We are here, we are here, we are here. On this amazing day, everyone, this is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's get back down to business. Alright guys, we're in the market today. Let's take a look at NZD, USD. That will be the New Zealand dollar versus the United States dollar. The time now is 4:34. The date is January 29th, 2021 Eastern. So let's take a look at our markups to see what's going on. Alright, so what we can see here, okay, this area is where the market started at, and this is back in June of '93. So June of '93, the market received a push up to the top. So it put itself in an uptrend. From there, we had a nice area of resistance right here. From then, the market went down into a downtrend, came all the way back down, had a long drop. It also ran into an area, a major area of support. From then, the market went right back up. So once the market went back up, it reached lower lows in the years of May of '01. From there, the market shot up. It reached the highest high of its peak back in '04. From then, the market retested previous areas of support to shoot up higher. It did it once again, did it for a second time back in March of '06. It shot up again. So we had the market in some type of consolidated uptrend, as we can see. So the market was doing, just bouncing up and down in here before the market came down and broke out. Once the market broke out, it broke our support system, our support line. So it created new areas of lower lows in '09, and that's January of '09, February of '09, March of '09. So we have a major area of support. From there, the market came down and it pushed right back up to retest areas here before it shot up even higher. So it put itself in an uptrend. From there, the market was at areas of high highs. It wasn't able to break areas of higher highs. So what the market did was came straight down. So it rallied back down into this area here, create an area of support, a new area of support. From then, you can see that the market is trying to push back up, but it wasn't able to hold. The market came right back down before it pushed back up again. So in this area here, I'm going to show you guys. So in this area here, we have about two antennas to the bottom, so it shows that the market was trying to come up. Once it wasn't able to sustain and hold the resistance where it was at, it came right back down. In this area again, we see something similar to the other side, not too similar, but the same type. So we see two antennas to the bottom here. If you look at it, you see two antennas. On this side, we see there's two antennas, maybe three, but there's definitely one long antenna. So right now we're going to say one long antenna to the bottom. So once again, the market came back down, created a long antenna. So when we see that antenna, and then on the side of it, we see an engulfing pattern. It shows that the market came down from somewhere, which is from up here. The market lost momentum, this is why we have this long antenna sticking out, because the downtrend lost momentum, so the market turned around and went up. So currently we are in an uptrend. Now we have to figure out what's going on in that uptrend. Is the market really in an uptrend? Because we are looking in an overall time frame of the monthly. So what we're going to do is we're going to mark some of our areas of current price action is, which is the last candle is price action, which is a red candle. So we looking for our overall trend. We can, like I said before, the market exhausted itself going down, so it turned itself into an uptrend. So we can create that uptrend. Once we create that uptrend, let's find some SR lines. So we're looking for, okay, if the price break through an area up here, how far is it going to go up? So this will be our resistance area. If we had to create a support, can be somewhere here. And then if we have another breakout, the market can head somewhere up here. But in between these areas of the orange SR lines, it can be more SR lines, because the market can turn around and go back down. But we won't notice that until you go down the lower time frame. So let's take out the weekly. Let's see what we see. If the market still is in that overall uptrend, as we can see, the market is still in that overall uptrend. It's trying to come back down to retest previous area of support before it breaks up higher. We have a doji candle on the weekly that's forming. So a doji candle, which would be a indecisive candle. It's the market don't know what's going to do, so we have to wait for the market to do what? We wait for the market to do what it do. Don't predict the market, just wait for the market to show us what it's going to do. So we can't really see confirmation here because we don't have an engulfing pattern, and we have a doji. So let's go down to daily and see if we can see anything open up in that time frame. And if we look at the last 3 candles, we can see that, okay, it was in an overall it was trying to go into a downtrend. We have 2 dojis that just popped up, indecisive candles, so the market don't know if it's going to go up or down. So it's basically, you can say, it's in some type of range. So if we create SR lines here and we place one here, and let's change the colors on these SR lines. Let's change these to red. So with the red SR lines, it show that, okay, when price breaks up and breaks out of this red, it's going up to the orange. If it breaks down of the support red, is going down to either the trend line, it's going to may respect the trend line and go up, or it's going to head down to our orange SR line that we built on the monthly time frame. So as the market being an overall trend, we would just have to wait to see if the market's going to break up or break down. And if we go down the time frame, we can see that the red SR lines that created, which is the resistance and the support, the market is respecting that consolidation area and is riding up and down in those SR lines. So what we're going to do is we're looking for that breakout, so we can sit here and say, you know what, okay, if the breakout happens and it goes to the top side, if it breaks out here, we look for entry. We'll take that to the next level here, and that would give us a total of 252 pips. That's an amazing trade. If we have to find some area stop loss, we can drag it down to the next area of where we can see some type of dip or some type of low, and that'll be somewhere there. If you want to drop it down lower, you can, but it's going to take more pips. So it's going to drop. There's more stop loss on the pips. So if you bring it down further, it'll be at 183. I don't like that risk and reward, so I will probably just leave it right here. And if it touches it and go back, then I'll just look for re-entry. So we're looking at 267 pips if it breaks out of our consolidation and go up. If it goes down, let's take a look at if we catch it here and catch it down to our next area, a TP. That'll give us a total of 289 pips on the way down. And if you had to add a stop loss somewhere, we can put it. Let's say we find that reversal probably be right here for a stop loss of 66 pips. So we can see that the market goes up. We're looking at 262 pips. If it breaks our consolidation, our SR line, if it turns back and turn away and go the opposite direction, we'll take it down. We'll take it for the downtrend or downside, and we take that for 289 pips. So those are amazing trades that we can take in the market. So now that was NU. Let's take a look at the Forex cheat sheets and let's talk some talk. All right, guys. Let's see. Let's take a look at our cheat sheet. Let's see what we're working with today. Okay, let's work with this will be the bullish. We're working in the bullish area, which will work on the morning star, the white soldiers, and the bullish 3-line strike. And these are 3 patterns that you will see consistently in the market. These are 3 patterns that will always come up. There's more. There's a few more that comes up, but these are definitely 3 that can help with finding entry. So with the morning star, what is happening in this area is that the market's coming down from somewhere, and then we getting that down candle. We got 2 down candles, which will be on the other end. It will be probably, it's showing red, but it was green, but it probably should be showing red because it's coming down. This candle here, the market is exhausting itself. That's why we have a small body. So if you see the market goes from a long body candle to a shorter body candle and it's moving down, and then we get this other rise of this other candle, which will be literally, this color should be green, meaning going up, and these 2 green ones will be really red. It's going down. So when we lose momentum here and we get that green candle that's white currently now, and it overlaps these 2 previous candles, that means the market's going up. So with a morning star, when you see this morning star at the bottom, it's like a sunrise coming to the top. And then vice versa will be an evening star, which you see the sun coming down to the bottom. So once you get that overlap, we can see and say, okay, you know what? That's the trade we want to be in. That's a pattern. That's confirmation. We just identify what's going on in the market. Let's take the trade, and you'll take the entry. So let's take a look at the 3 white soldiers. 3 white soldiers. That's another pattern you see consistently over and over and over with all these pairs that we go through daily. So with the 3 soldiers would be these 3 bodies, or these 3 squares, the 3 rectangles that's right here on the right hand side. So what it is the market's coming down from somewhere. So these 3 lines would be, so if I had to picture it, paint a picture for you, it would be these 3 lines would be red candles, and then we will have 1, 2, 3 green candles trying to push up. Once you have a consistency of 3 candles coming up back to back, and it's the same size body, or it looks like the same size body of each candle coming consecutive one after another, that shows that the market is strong enough. It may just go up. If you want full confirmation, you can wait for a 4th candle to show up before you take the trade and take it up for the buy. Alright guys, let's take a look at bullish 3-line strike. So bullish 3-line strike is similar to the 3 white soldiers in different ways, but I'm going to break it down to you. So this side here is supposed to be the market going down. So 1, 2, 3, this body, this body, this body, all 6 of these are supposed to be red. So the market is supposed to be going down from somewhere in red. So we have lines with bodies coming down. That's the overall market. So when you see that line strike for entry is when you see this candle here and it overlaps previous 3 to 4 candles. As we can see, it overlapped 1, 2, 3 candles, overlapped all 3 of these candles. So it shows that this is a strong bullish momentum. It's starting off with a bang. Let's take the entry right now. And then what you do is, once you see that confirmation of the line strike pull up, so once it pulls up and it closes out, remember, you don't want to wait, and you don't want to just see the market go and create this body, and you look on the time slot, and let's say you're on the 4-hour time frame, and it says, you know, the body of this candle won't close out until the next, 3 hours. You have to wait till 3 hours to close full confirmation for you to take entry. Do not take the entry of these trades when the pattern of the candles are still active. So if it's a number on the side of the candles on the trading view which shows like a time frame, for example, if I go to my time frame, if I scroll over to the right and you see how it says 10 minutes and 58 seconds. So if I zoom in right here, the 10 minutes and 51 seconds is reading for this active last red body candle right here. So this is active. So it takes 10 minutes and 43 seconds for this to close. For us to take any type of trades, once we see a pattern, we will want to wait until this time frame goes to 0. This would close out and it will look just like how it is now, and then you would start seeing another candle body starting to form, and that's when you take entry. Okay everyone, this is Cam Jones FX Daily Analysis. Thank you for watching.